Namaste and welcome to review of financial analysis. Objective of financial management is maximization of shareholders' wealth. Shareholders' wealth is reflected by the market price per share of the firm. Wealth maximization is pursued in financial management by taking careful decisions in the field of investment, financing, and dividend. The wealth maximization goal is an extension of profit maximization goal for the organization. Operating profit ratio is net profit before interest and tax divided by sales. That is, operating profit divided by net sales into 100 is equal to operating profit ratio. In net profit ratio, the denominator is net sales, means net profit ratio equals net profit divided by net sales. Net sales is the denominator. Objective of financial management, maximization of wealth. Shareholders' wealth is reflected by the market price per share. Wealth maximization involves sound decisions in the field of investment, financing, and dividend. Wealth maximization is an extension of the goal of profit maximization. Operating profit ratio is nothing but net profit before interest and tax divided by sales, or operating profit divided by net sales. Net profit ratio. In net profit ratio, the denominator is net sales. Net profit ratio equals net profit divided by net sales. A firm has a capital of 10 lakhs, sales of 5 lakhs, gross profit of 2 lakhs, expenses of 1 lakh. What is the net profit ratio? Net profit equals gross profit minus expenses. 2 lakhs minus 1 lakh. Net profit is 1 lakh. And net profit ratio is net profit divided by sales. Sales is 5 lakhs. Divided by 5 equals 20%. Then the capital of 10 lakhs, we are not required to use it here because the formula doesn't need it. The excess of current assets over current liabilities is called net current assets. It is also called net working capital, and it has got a third name of just working capital, plain and simple. Receivable turnover ratio helps management for managing working capital. Receivable turnover ratio means turnover divided by receivables, net credit sales divided by average receivable. Availing bank overdraft to buy machine doesn't help increase current ratio because machinery is not a part of current assets. That is the simple reason, because current ratio means current assets divided by current liabilities. Since machine is not a part of current assets, bank overdraft, which will be a part of current liabilities, will not affect the current assets through the machine. Working capital turnover ratio is net sales divided by net working capital. That is net annual sales divided by net working capital. Net working capital means current assets minus current liabilities. Working capital turnover ratio may be classified under activity ratio. What is activity ratio? Activity ratio measures the efficiency with which resources or assets are used. They are turned over. A firm has 10 lakhs capital, 5 lakhs sales, gross profit 2, expenses 1. Therefore, net profit ratio means net profit by net sales. Net profit is 2 minus 1. Sales is 5. Therefore, it is 20%. Excess of current assets over current liabilities is called by all the three names: net current assets, net working capital, working capital. Receivable turnover ratio helps management to manage working capital. Receivable turnover ratio means net credit sales divided by average receivable. All availing bank overdraft to buy machine does not help increase current ratio because bank overdraft will be included in current liabilities, but machine is not a part of current assets. Working capital turnover ratio is the ratio of net sales divided by net working capital. Net annual sales by net working capital. Net working capital means current assets minus current liabilities. Working capital turnover ratio may be classified under activity ratio. Activity ratio means that one measures the efficiency with which the firm is using its resources and assets. Liquid ratio is an indicator of short-term solvency of a firm. Liquid ratio or quick ratio equals liquid assets minus current liability. Liquid assets means current assets minus inventory. Return on investment can be decomposed into the following ratios, namely net profit ratio and overall turnover ratio. We can see it like this. ROI equals net profit divided by capital employed, which is also represented as net profit divided by net sales, which is also known as net profit ratio, into net sales divided by capital employed, which is nothing but overall turnover ratio. If you strike off net sales and net sales, it is net profit divided by capital employed, which is the first formula. Return on investment can be decomposed into net profit ratio multiplied by overall turnover ratio. Funds flow statement is a tool for analysis of financial statements. It analyzes balance sheet. Funds flow analyzes balance sheet of 2 years to validate the movement of funds from previous financial year to the current financial. All listed companies are required to prepare cash flow statement. Strictly speaking, every company other than one person company, small company and dormant company are required statutorily under Companies Act to prepare cash flow statement. It is not just restricted to only listed companies. It is covering all companies except these three classes. Liquid ratio is an indicator of short-term solvency. Liquid ratio means liquid assets divided by current liability. Liquid assets means current assets minus inventory. ROI can be decomposed into net profit ratio divided by overall turnover ratio. Net profit ratio equals net profit by net sales, and overall capital employed turnover ratio is nothing but net sales divided by capital employed. Funds flow statement analyzes balance sheet of 2 years to validate movement of funds from the previous financial year to current financial year. It is a tool for analysis of financial statements. All companies barring or except one person company, small company and dormant company, it is mandatory to prepare cash flow statements. Earlier it was listed companies which were required to do it. Now all companies are supposed to do it. Thank you so much. Thanks a lot.